Hi, good evening, everyone. It's been just about a month since my last video. So how's everyone doing? We're into the month of July already. Hope everyone is doing well. Hope your portfolio especially is doing well since the market has been doing many new highs. All right. So if you've seen our previous video, we're bullish for the month of June. And right now we're in July. Let's see how things going to turn up. There's a lot of things that's happening. So take the next just 10 minutes, hopefully goes 10 minutes to listen through this whole video. I think you're going to benefit from all this sharing. Okay, just before I start, all right, whatever I share here, it's the usual disclaimer. Okay, it's nothing to do with Philip. It's our personal view. All right, it's just purely for educational purpose. It's not for entertainment purpose. Hopefully you do take home something after this. All right, so what we'll cover today in the video, okay, current happening, there's a lot of things happening now in the world. Okay, the forecast for July and August. The Russell 2000 index, I think there's some interest in that, people have been asking, or the S&P 500 index, which is better. We just do a little study on that, and hopefully another day you can make a decision. All right, Trump and China, latest update, Trump and Bitcoin too. All right, then we have the Greed and Fear Index, where is it at? And lastly, Hong Kong and the SG Singapore REITs. Okay, so right now, currently, just tonight, as I was preparing this video, we see all red all around. All right, that's fairly good, right? Because we've been waiting for this pullback. You can see today, a lot of the chip stocks has been down. All right, the tech stocks are also down mainly because of what Trump said. All right, he wanted to curb all the export of the chip makers to China. I think that really caused quite a bit of stir. And as usual, it's Trump. It's always whenever he says something, the market tends to react. So it's an overreaction. If it's it or not, I think that's good also, right? So that stocks that come down, it'll be cheaper for us to get. All right. So if you're waiting to get into the market, I think you could use this opportunity when it's down to really scale into your position. All right. So seasonal pattern. Right now we're in July. Technically, July has been a good month. It's been up. All right. So far, actually, been seeing it going up as just except for today. All right. Whether you continue on the trend, I think we could actually see going to taper down already, right? Especially after today's bearish engulfing candle. All right. So seasonal pattern, we can see best 3 months for the Nasdaq is actually July. Even for S&P also is the July. All right. The worst months actually for the Nasdaq, it could be around the Nasdaq September. All right, for S&P also September. All right, so coming to August, we might see it taper off, and we could even see it coming down. Don't be too worried. I'm actually excited about that. I hope you guys are also. So I'll share a little bit more later at the end. Okay. So over here, we continue to be bullish. As we can see, a bull market typically lasts around 60 months. Okay, we are only actually close to about 2 years in the bull market. So I think the market still has leg to run. All right, of course, it's not going to run a straight pattern. You will see some corrections here and there. Take advantage of this correction to be jumping in if you missed out. All right. Also, stocks don't really like the lame duck election years. All right, so this year it isn't because up for presidency is either Trump or Biden, and so far everybody knows Trump. So if it's a 4th year and a new president, we can see market tend to move up. So with Trump coming in, and especially after the shooting, we can see there's quite a big support for Trump. So it could likely have a likelihood that Trump could be voted in. He's gaining a lot of popularity. So if Trump comes in, a market usually is a bit more favorable for that. Okay, and one more thing is MMF funds. All right, that's actually surprisingly in June. All right, the MMF actually hit all-time high 6.12 trillion. So there's a lot of funds still inside in the MMF. All right, rushing to have the higher returns. All right, so when rate cuts start to come in, this will flow out, and yeah, it's anyone's guess where this will go in. If it goes into equity markets, which has better returns, all right, we could see it continue to push the bull market up. So there's still a lot of funds sitting there in MMF, so this could really help to support the bull rally. Right, the Russell 2000 index, okay, this is the ETF. Okay, this is actually gaining a lot of popularity because They're a smaller company, so they're actually interest rate sensitive. So with expectation of rate cuts, all right, we can see this moving up. All right, whether you should actually get in now, really, you got to do a bit of a study. All right, right now it's hedging some resistance. So the short term, we could see some pullback, around pullback to about 220 or so. I think if you haven't gotten in and you would like to have some Russell 2000 for diversification, you might consider a position around 220 or even 210. But if you ask me, if I do a comparison between Russell 2000 and the S&P 500 and even the NASDAQ or even the MSCI, if you do not know what it is, check on to my previous YouTube video. I've shared that, even taking a position. So look at it and you see where the Russell 2000 is, all right, over a 6 years span. All right, it's actually the weakest return. So if you were to ask me in long-term wise whether I want to be invested into the 2000, the answer is simply might not. All right, I think there are other better stocks or ETF out there to hedge or to diversify. So although it's gaining popularity, as you can see, it's moving up, but in the longer term, I wouldn't have this in my portfolio. If you're talking about short-term, mid-term kind of trade, then yeah, you can take a position on this, of course, knowing your levels. All right, so Bitcoin also has been gaining a lot of popularity. If you also have seen our previous video, attended our webinar, you know our 3 simple forecast this year, A, B, C, right? A being the AI, B is of course the Bitcoin. So Bitcoin actually has been jumping up quite a bit this year. All right, so we just continue to be bullish on it. And Trump, if he is elected, I think people also are a bit more positive towards Bitcoin because he is actually also pro-Bitcoin now. All right, and he's also VP also is pro-Bitcoin. So I think with that, I think people see more optimism in the Bitcoin space. So right now, Bitcoin is around about 15% or so from the all-time high. All right, I think we could actually see it continue to march up. Of course, not in a straight line, but we continue to remain bullish for it to hit the all-time high. And I think we could even see a surpass of that within the year. All right, Coinbase is another one that we've been preaching through the year. All right, yes, come up also in my previous video. Also, we have showcased Coinbase now coming up nicely to about 258. There you could see some resistance, but I think for this year we could actually push through to even 282 or even close to 300. CleanSpark is another, is a mining for crypto for Bitcoin. All right, we could see it now a bit of resisted. All right, but I think we could actually go past it, go to about $24. So CleanSpark is another stock that is related to Bitcoin that we're watching. All right, Trump and China, we know just today or Trump has been talking a bit about China. He's picking this guy as the VP. All right, and he's also not so pro-China. All right, we can see that their stance is already wanting to deal with China. So I think because of that, we saw the China market selling off the last few days. All right, so we need China market or the Hong Kong market to really hold this line. The last few days, we actually seen it rally and then pull back on Trump's shooting because they are a bit scared if Trump is coming back in, there'll be all those the trade wars and all. So we saw a little bit of pullback in the Hang Seng. All right, if we for it to continue on, we cannot see it break this line. I think if we see it break around 17.6, it's not ideal. I'd like it to hold around this level. If it could hold, consolidate, and start to push up, then we could see Hong Kong coming back to life, right? Once again, remember your proper allocation. As we said from the start, our allocation is not big to the Hang Seng. If you are full on to Hang Seng and all, I think you might want to consider trying to reposition. All right, China, as I said, always has a lot of regulatory problems. Right now, they're having their meeting. Hopefully, something good comes out of it that can spur the next leg in Hong Kong, right? So you can see they're always taken hostage by US. There's always something bad that comes out. China gets affected, so it really needs to have the independence. And hopefully, with the meeting that is happening and if it's over, people will gain more confident in China and Hong Kong. Then we could see actually this year that it could actually regain the 19,600 level. All right, we do remain bullish, but I think we do have to consider your allocation. Currently allocated more to the US and even to Bitcoin, but China, it has to be have a play. It's good to have to be in that, but remember your allocation. All right. Green and Fair Index actually still in the grid zone. Yesterday or the day before, it was actually around 63. I think whatever we are seeing now, there's a bit of pullback. All right, I want to see it pull back more. People are still quite garang in the market, so it's perfectly normal. So we're not at the level of buying yet. Okay, so for the S&P 500, if it corrects even just 7%, we could see it go around 5,250 level. So don't be surprised. I want it to be at this level, at least come down. All right, now we're talking about 10 to 15%. Right. Likewise for the Nasdaq, if you could correct about 10% or so, we could see it around the 18,000 level. All right, so there's at least another 2,000 more points to go. I don't think it'll be immediate. It could drag out to even August, September. All right, so be on the lookout. Don't be surprised. Don't panic. Take this chance, but a pullback, I think, is a good chance. If you actually miss out this whole rally, you try to get back in, like shared at the start. I do personally think that's quite a bit more leg in this rally. So, if you got anything, always just feel free to just drop us a text. Right, Nvidia, this is really the hot stock we have spotted ever since it was around even at $20. All right, so it's flown tremendously. Right now, when it pulled back, you can see actually when it tried to rebound, it did not take up the previous high. It just rebound to just 3/4 of the candle and started to pull back. So I think if we could go to 109, 102 level, I think that's where you could start scaling in. If you miss this whole Nvidia AI rally, I think those are level when you start to build a base. You might want to just consider taking some position. Remember your proper allocation. If you need, always talk to your consultants, your advisors. All right. I put my contact over there. If you need anything, of course, feel free to reach out. If you need help in your portfolio restructuring right now, if your portfolio is not up, it's down, you're not sure what to do, just find us. I think we do help our clients manage, and we're seeing a very nice green up at least over 10%. So if you do need help, just reach out. You got our number. We'll just put our contacts later. All right, these are the things that as a client you could be receiving. All right, we send out SIA. We have been sending out some ideas for the Singapore, for the Hong Kong and US. Okay, this has taken flight, even for sets also. All right, so we hope you enjoy this sharing. Hopefully you have benefited for it, and of course do like, share, and subscribe so that more people will benefit. All right, I'll see you in my next video, and hopefully maybe in our webinar in August, and we're gonna organize another one just next week, right, with Roy. So do sign up for that. There'll be a link there also. Do sign up for that. He'll be sharing a little bit more on the technical aspect. So if you have not gotten yourself the link, do register, and we'll see you there. Take care.